Hey folks, and good afternoon. This is a little Fed, what I would call wash and rinse. And what I mean by wash and rinse is um, Wall Street is looking at what the Fed did, which is they basically did what they said they were going to cut rates a quarter, and then they cut the number of times next year they'd planned to cut. They went from three to two. And so I think the question is, if you look at the numbers, you've got a lot of built-in inflation that Wall Street's saying it's going to be hard to bring it down. You know, some of that inflation is shelter inflation and things like that. But the market itself sold off because uh, I think that people are saying that it's going to be some tough sledding ahead and everything. But, you know, really it's all speculation because what really matters, I think, at the end of the day is get control of the deficit. That's number one. And number two, have a growth plan that everybody buys into. And I think we'll look at a couple stocks, but one of the things we can take away from the Fed announcement is the following. We went down to 60.71. Now, keep in mind, that is about 50 points below the monthly open, which is very interesting this time of year for us to dip down that low. So today's close is going to be real important. We got to be within kissing distance of that 61.20 for this rally that we've had to reestablish itself. So they put Humpty Dumpty back in. But one of the things that we've talked about a lot is the two pass rule. We know right now my pivot number of 61.45, uh, 61.45 is the number that we got to get above. We get above 61.45, we're fine. Keep in mind my pivot number for the QQQ at 5.25.55 still intact, even with the big sell-off. So you got to still be looking for buys in the market, I believe. And so we got, if you look at that 30-minute chart there, you see 60.71. If it breaks 60.71, they're going to put some more, what I would call pain on the stove. But if it starts making highs from here, recovers, gets above the midpoint, which is about 61.15, then you'll start seeing more buying step back in. But everybody hit the doors when they started selling, and you can see the rapid fall there from that 61.45 area. So let's look at the NASDAQ futures next. NASDAQ futures did the same thing. You got a two 030, but if you look at the monthly open there, you're at 21260. So about 200 points, about a half a day out on that one at those prices. Okay, that's something to keep in mind. And then let's look at three stocks that we've really been focusing on. First one, Palantir. How did it hold up? Palantir. Remember, 77.55 throws it into a pro buy, and we went right up there to it, 77.60. So you take out 77.60, this stock's going to charge towards $80 a share. So that's one thing I'm looking at uh, as a possibility. Palantir. Let's look at Bitcoin futures just to give people an idea on Bitcoin futures, what's going on. Again, Bitcoin futures is basically in sync with the market itself. It came down. What's that low there on Bitcoin futures on that red bar?
At 103,605.
Okay, 103,605. So uh, keep your eye on that number. That'd be a second pass. And then let's throw up Apple. How's Apple holding up? Okay, Apple is sort of following along, really stronger than the market if you look at it. Um, so that's holding in good. And the one I really want to focus on is Tesla. Put Tesla up there. We had a low of, I think 461. Jonathan, what are you showing the high today on Tesla?
Right around 488.5. Right around 488.5.
So 26 points range, which is slightly less than yesterday's 30 range, but it's moving back towards the 17-point average on Tesla before we got into this week. So is that a 30-minute right there you're looking at? 30-minute?
Yeah, this is a 30-minute chart.
And what's that high of that current bar?
Current bar high is 473.25.
Okay, so we definitely want to see try to get above 473 before the close today. 473 quarter. All right, the other thing I wanted to do during this presentation is to play the tape from YouTube on the two-pass rule. Let's play that tape, and we'll see where the market is after Powell is talking.
All right, let me reset my screen sharing to play the sound. And this is right from the YouTube page, just like Tom said. It's one of the most recent videos that Tom did.
Hey folks, I've been trading for a lot of years. I'm Tom Busby, and let me cover this. There's a high degree of risk involved in trading. Past performance is not indicative of future results, and you have to do your own due diligence. But one of the benefits of experience is that you learn things that really give you an edge. Today's topic is my two-pass rule. In my opinion, if you'll learn this, no matter what time frame you're trading. If you're trading stocks, you want to look for two passes. If you're trading commodities, you want to look for two passes. And the beautiful thing about it, you can adjust it to whatever style you want to use. It works. The two-pass rule was created 20 years ago. I've been using it ever since. I use it around news. I use it around earnings. I use it in all my trading, the two-pass rule. At DTI for years, we use what is known as this double pass rule or this two-pass rule, waiting for the setup. Now, what is the two-pass rule? Well, you got to establish a high and a low range based on a time frame. Say you're around earnings. Usually the first hour after earnings gives you that high and low range. That's an example. There's other examples around news. The first 10 minutes after a major news, you get two passes. There's just a lot of techniques for using this, or if you're using a daily stock new high, the next day, if it takes out that high, you've got a trend starting. You look for either a break higher or a break lower. You wait for that second pass to confirm, and the beautiful thing about it, any time frame you want to, for a long entry or a short entry. I use it every day. Now, here's an example of what a second pass looks like. You have that frame time. Again, that can be adjusted to your own style. But once it breaks higher the second time, after it pauses or refreshes, that's the trend that you want to go with. I love to do this. If you ever watch me trade the Fed live, I use it on the Fed all the time. You know the time of the Fed, you know the market's going to move. 10 minutes after the Fed, you get the two pass in effect. You get an early trend. You can take advantage. I learned this years ago when I had a Globex terminal. And the Globex terminal was a forerunner to electronic trading. Now, the pullback or pause should not extend past the midpoint of your frame or high window. So let's just talk about a day. Let's say we had a high of 100 and a low of 98. What I'd look for on that day, that next day, was not the pullback to go lower than 99. Halfway. That would tell me, hey, I'm setting up maybe for a two-pass play when it goes higher. That's an example. Now, let's go through a few examples to show you what it looks like on a few different time frame charts. Our first example will be using the first 3 days of the month. I use it every month. I set the high, I set the low. I want to see it go past that 3-day high and then come back and go through it again. That's usually the trend. And I would say about 80% of the time, it's that simple. So you need to know the two-pass rule, and vice versa if it's going down. Now, The process by marking that high and marking that low in the first 3 trading days means you got to pay attention to the numbers, whatever ticker you want to trade. Now, what we want to see is the price run through the high, then have a natural pause or pullback before making that second pass higher to make more new highs. That's an example of it there on a futures contract. I don't know if you trade futures or not, but it works on futures, works on stocks, works on options. Look at that. FTD high for the first 3 days of the month is boxed in yellow, 58.22, 57.24. Watch it. Go over to the right and you will see once we broke that high, the second pass through it kept going all the way to the target later on. Pretty good trick to know the 2-pass rule. Now, on the 7th trading day of the month, we saw the market break higher. Off we were, up we went. You can mark the high of that bar as a second pass line, and we see the confirmed second pass for a higher entry and a nice trade. Now, you can follow the same process on a weekly basis. Now, typically on Mondays, I use the 5-day high or 5-day low for my frame on a Monday. If Monday's market makes a new high, then on Tuesday, we go higher. I do the same process over and over again. Now, here's an example of using the Roadmap reference bar. Roadmap software I created years ago, and I wouldn't trade without it. It puts all this information right there in front of you. We call it the RB frame, where you can add in time of day for timing practice. You see those orange lines? So you see how we break the lower RB frame. Where do we go? Down and further down. That's a picture to start the trading day at night. Early start on everybody else when they're trying to figure out what to do. You can see it right here in black and white. In this case, black and red. Now, a couple hours into the night, market, when Asia opened up, you see the break of that RB frame low, early sign, second pass, down we went. This is beautiful stuff, folks, the 2-pass rule. Let's show even an even shorter time frame. Here's a 5-minute chart. Now, I don't use a 5-minute chart generally, but you can still use a 5-minute chart if you're really trying to get positioning on a ticker. You get the frame and you watch that blue bar that's created by our software. When it breaks that second pass, you got an early entry, or what we call getting the edge. I know this is going to help you if you just practice it. The initial break lower, followed by that natural pause or retracement, sets the stage for a short entry for day traders. Now, the second pass lower triggers an entry for a nice, quick, and profitable trade, and our stop can go above the high of that retracement. Stay in it until you stopped out on that one. Now, if you make another new low, we have a possibility to hold a position longer and move our stop down accordingly. I've done that for days just off a 5-minute chart. Now, here's a discussion about news. I like to use 10 minutes when I'm talking about news and I'm doing a higher or lower frame. Then you can go back to the 2-pass rule. We use the 10 minutes after the news for futures to set a high-low frame. If I'm using stocks, I give it 20 minutes. They move a little bit slower. So 10 for futures, 20 for stocks. As I always say, I hope you take this and I'll see you on the flip side. All right, let's go back to the live market here. If you look at Tesla, it's breaking that low right there. It's at what is it at 465 right now, Jonathan? 465. And the S&P broke its low, 66. So they've got heat on the market right now, and the market is obviously what Powell is saying is not helpful, okay? And the market's basically saying, we're tired of you, and they're selling it. So I think the best thing to do is just sit here and watch this and see where the setup is once we get in that last 30, 40 minutes today. But that's a lot of movement. 60, 61 from 61.48, almost 80 S&P points. And I find during these time periods, it's better to watch rather than try to trade. Let it settle down, let the trend reemerge. But definitely, you've got a sell signal right now on the E-mini, sell signal on the NASDAQ, sell signal. Well, if you just go through the different stocks, I've got sell signals this for today, E-mini, NASDAQ, Russell, Tesla, Palantir just went into the sell signal. NVIDIA's in a sell signal. IWM's a sell signal. SPY's in a sell signal. And QQQ's in a sell signal. So you've had you've had quite a sell signal right there across the board when we broke that second pass of the E-mini. Everybody see that right there where the second pass has been broken, how they're pushing it now? Now you got to get up, you got to take out 60.90, the top of this bar, to basically try to uh, hit it, if that makes any sense. Okay. Yeah, this is a 60.57. It's dropped 30 S&P points in the last 20 minutes. What does that mean? What it basically means is they're putting the heat on everybody that's long. Okay. That's exactly what it means. Right here at the Fed, and Powell's still running his mouth. We got to get him to stop before we know what to do here. Um, Goodness gracious. That's exactly what the issue is.
So Tom, if you recall we rolled over this month or this week, excuse me, to the March 2025 contract. The month open from December, which is really the true month open, is 60.51, which looks like they're trying to get to.
Now, when you say, explain that to everybody, Jonathan, where they know what you're talking about.
Yeah, well, the futures market's a little bit different than say like the cash index, the SPX. If I throw up the cash index here, SPX, we have a month open at 60.40. All right. Well, the futures market, it trades more 24 hours rather than the 8 hours or so that the cash market is open. The futures trade 24 hours and they have contracts that roll over. But at the back, we're trading December 18th. And this week we rolled over from a December 2024 futures contract to a March 2025 futures contract. Now, this contract, the March contract, opened the month back on December 1st, or I can't remember if it was December 2nd, maybe the first trade day of the month.
Yeah, I think December, yeah.
61.20. But the true month open back on December 2nd, we were still trading the December 2024 contract. And I'm not sure if it'll load in at this point during the day today, but yeah, see that? December 2024, the month open, the true month open is 60.51. So a lot of times you can see after the contracts roll over, you might have a move that moves towards that, true month open, if you will. And it'll be interesting to see and watch this over the next part of the rest of the day, if that 60.50 level will hold for the rest of the day. That's what we're looking at here.
Yeah, I would say 60.45, 60.50 is you got to be your support. But here's the issue. The issue is you've had, and I'm just doing percentages here, you've had the QQQs over 1% down 1.22, and the SPY's down 0.94. So you've got clearly a down day for both these cash indexes, and you got the VIX up 3.53. Um, so you got to ask yourself, where is the buying going to come from? Okay. But phone's talking to me. And so you say to yourself, okay, where is the buying going to come from? Well, the way I think of it, the only way you're going to get buying this market is start taking out out these bars. Now, if you look at these bars right there, that high is 60.91. 60, 64, we're closer to the low than we are to high. Market's still under pressure when I look at that. And I don't have to watch TV to hear him bumping his gums. Bring up here, this is very interesting though. If you'll bring up MTI and put an hour chart in there and put the daily chart. And this shows a comparison, sort of a bigger picture look here, because this is where it creates the issue. Remember, I told everybody that as long as we're above 525.55 using a NASDAQ, you should be bullish. And I still believe that, but I want to show you what MTI is saying in this current environment.
Okay, we'll throw the S&P in there and the middle chart, we'll change that over to an hourly.
Yeah, change that to an hourly.
Okay, here we go.
You can get rid of that third chart where you can see a bigger picture. I think it'd help him. Yeah. Okay, and that support comes in. What's that lower white line on the daily chart? Is that about 60? What is it, 60, 50, isn't it?
Yeah,
See
60,
it?
50. Yep.
There's your 60, 50 number. Does everybody see that? I hope everybody sees that looking at the daily. Now, you've had a break from where we were above the top of the white line, below the bottom of the line, throwing us into a sell about 61.28. Looks like 61.28 where it broke and closed below it. And as we come down, the 60.55. All right, that's the E-mini. Put the NASDAQ futures in there. All right, look at the NASDAQ futures. You got the daily is clearly in a buy, but the short term has fell out of bed. Now put the QQQ in there. QQQ is definitely in a buy in the short term. We're down here at 27.60. And if you look over there at the high of that white line, it's 23.30. I'm saying 25.55. As long as we're close above that, you still got to be thinking buy. Okay. The way I think of things. Okay. Just broke 27.40 on the QQQ. Very interesting. Okay. Now, look at Tesla. It just hit 461, Jonathan. Tesla hit 461. And if you plug Tesla in there, it's extremely bullish, but look at the short term. S&P's at 60.44. They're not stopping, Jonathan. They got flat a sell on the day. This is going to be the news item of the day, how the market dropped. What is it? Pretty good. So if you want to stay long any position, the best thing to do is go sell some calls against it and hedge it. That's the best way to, uh, I guess, to protect yourself from what's going on right here because this is like insane selling. And so what you do, you go out, and let's just give an example, okay, Jonathan? Let's go to a live market and uh, look at something here, okay? Look at a QQQ, and I'll show them what I'm talking about.
All right, QQQ got an option chain up.
Okay. Well, pick a QQQ. Go out to January 3rd. Find a $3 option, for example. Go out January 3rd and find a $3 option.
The 538 call is about $3.
Okay, so if you were long that call thinking, hey, you're catching Tesla at the low or catching the market at the low and it started going against you, I would instantly in this kind of market sell the next strike up, which is the 39, and that way I would reduce my risk down to 29 cents. Everybody should understand that you got to hedge yourself up in this kind of market, and then you can take it off after you give it what I would say you give it a day or so, if that makes any sense, what I just said. And that's all you can do. I wouldn't go short because if this market's truly going to go lower, right? If it's going to go lower, we'll have plenty of opportunity to get short. You got a news related sell off that's pretty substantial. And, you know, that's just the way you got to do it. All right, Jonathan, let's wrap it up and we'll be back at 3:30. But anyway, this is quite a sell-off the way I see it. And because of that, you just gotta be a little cautious in this kind of environment, the way I see it. I mean, you got the best stock out there, Tesla, just falling out of bed. People are saying, I'm getting out because they're selling Tesla to pay for other mistakes they'd made. Okay? That's exactly what's going on in Tesla. It'll be back, but what are you going to do? All right. Thanks, everybody. This is quite a surprise. I'm a little surprised by this kind of sell-off and the viciousness of it in such a short time. We're talking about you got a market very bullish, what, less than an hour ago? You're at 100 points down. That's pretty, needless to say, that's some heat. So what you do is hedge yourself up, any open positions, look at it, hedge yourself up, and basically say to yourself, okay, I'll come back when the conditions say come back. Right now, I I think it's sort of like a hands off the mouth situation personally. They brought the heat, that's for sure. I mean, everything I look at I mean, is in retreat mode. I've looked at several things. Palantir, which was about to break out, is now at 74.90. Uh, Apple's pulled back 251. We got our position hedged there, right, Jonathan?
It's a call spread on Apple.
Yeah. Yeah. I don't have any unhedged positions, is what I'm saying.
That's right. You do not.
Okay. That's good. That's that's a good place to be. All right. Thanks, Jonathan.
Thank you.